Here we go. Money talk.
Here comes the money. Money, money, money.
Dollar, dollar. Dollar, dollar. Ching, ching, bling, bling. Got the chatter.
So, if you've had Alibaba stock in your portfolio this year, I'm sure you're feeling a bit like Mr. McMahon over there, right? But if you've had Alibaba stock in your portfolio for the past 5 years, I think you're feeling a bit like this. So, Alibaba stock is up 69% year to date.
Nice.
And mind you, we're only on the 24th of February today, and this is now a $341 billion market cap, right? So it's not as though Alibaba is a small cap stock with a $1 billion market cap that can move 200 million or something like that, right? When there's a 10% move, we are talking about $30-40 billion worth of market cap. So since Alibaba stock has been moving so much, I thought it'd be a good idea today to revisit Alibaba stock, especially since their earnings was just released. So in this video, we're going to talk about 3 things. Number 1, we're going to talk about Alibaba's earnings. What are my thoughts on them? Number 2, we're going to talk about this valuation, right? Has the stock run too much, or what's the updated valuation? Number 3, we're going to talk about my personal moves and also my opinions, right? Because obviously I've been an Alibaba shareholder since about 72 Hong Kong dollars. So what am I doing today? So let's start off with Alibaba's earnings, and we can take a look at their quarterly revenue is 38.4 billion, up 8% year over year. And I think investors are pretty happy with this number, right? Because if we take a look at the stock, actually they bid up the stock about 10% after earnings. So you can see really good performance from the stock after earnings. So I think investors are pretty happy with these numbers, but we've really got to dig in, right, and take a look at how good the actual numbers are. So 38.4 billion, up 8% year over year. This is good because you can remember from 2022 to 2023, actually Alibaba's revenue growth was flat, and this was a big part of why the share price declined. So net cash position $52 billion. So this is cash minus debt. Take a look at Taobao and Tmall grow 8% year over year, which is primarily driven by online GMV and improved monetization, right? So we can see that Alibaba's investment into AI might be leading to improved monetization, right? Because this has come really on the heels of their AI investments. So we take a look at cloud revenue, which is this part I think is very exciting for investors, right? Accelerated to double digits at 13% year over year. So if you can stay at 13 or 14 or up towards the 20% year over year for a very long time, right? I think this cloud business is going to be a very big business, right? And as you can see with Amazon's AWS, it's a very profitable business, right? With AI-related product revenue achieving triple-digit growth for the 6th consecutive quarter. So I would say something about this. 6th consecutive quarter triple-digit growth is not really that impressive to me because they are not giving us the actual numbers, right? If they give us the actual numbers and it's 10 million and it's growing triple digits, it's really not that impressive for Alibaba, right? Because you can remember that Alibaba is actually a huge company with about 38.4 billion in revenue in a quarter, right? But hopefully Alibaba is scaling this business to a decent size because you can see that there's a lot of cloud demand in the US, so I don't see why it would be that different in China as well, right? So AIDC is another very interesting part of their business that we'll get into with more detail later. So other businesses continue to improve operating efficiency. So this is just a normal management talk. So if you take a look at the balance sheet, these are some of the most important numbers that I've highlighted. For the 9 months ending 31 of December, it's 18 billion of operating cash flow, 18.6 billion minus 8 billion in capex, and then you get about a $10 billion free cash flow, right? So I'm going to use $20 billion of free cash flow in my valuations because I believe that the real earnings potential for Alibaba is actually still about 20 billion in free cash flow, right? You can see that these businesses don't actually change that much year over year. So since Alibaba is such a big company, I'm going to go through the segments quite quickly, and I'm only going to highlight the things that I find incredibly interesting, right? Other than that, like this 5% year over year growth for this China commerce retail business, I think it's quite expected from investors already. But I think this wasn't that expected. So you can see that AIDC actually grew 36% year over year, right? And AIDC is basically AliExpress, Trendyol, and Lazada. And I'm not sure whether Alibaba actually operates in the international markets, but we'll just say that they do. So AliExpress is their wholesaler. Trendyol is actually this Turkish and also Middle Eastern company that Alibaba has a big stake in, right? And last it's Lazada. Lazada is for the Southeast Asia region, and I think Shopee is actually whooping their ass in the Southeast Asia region. So I have to look at facts where facts are, right? And Lazada is just not doing that well in the Southeast Asia region, right? So we can take a look. Actually, the growth numbers 36% year over year. This is a very, very good growth, right? But overall, it's up about 32% because you can see that the international commerce wholesale is actually only up 18%. But obviously, the retail is much bigger than the wholesale, right? That's why when you blend the average, you get this kind of numbers. So a key point to note that this is still a loss-making segment of the business, right? And I think in future, this can be a very, very profitable segment of the business, right? As profitable as I think the China commerce segment. So you can see that this is not even factored in the valuation right now. So Cloud Intelligence Group, you can see that grew revenue 13% year over year. And again, I want to stress that if they can grow this 13% year over year for a long time, it's going to be a very big business, right? But if we take a look at face value, right, you can see that actually 31 billion in revenue for only 3 billion of adjusted EBITDA is actually very, very low, right? Because the other cloud players have huge margins on this, right? I think like AWS, when you see their revenues for their cloud business go up, obviously their capex is going up, but the cost is not really going up substantially like this, right? So this is only about a 10% margin. So next, obviously this is the logistic network. The logistic network did $3.8 billion in the quarter, and this is about flat year over year or minus 1% year over year. So next is the local services group, and revenue is up 12% year over year, and this is also a loss-making segment. So next, digital media and entertainment. So I didn't realize actually how big the digital media and entertainment group was. I thought it was like some small project, but actually it does 750 million in revenue in a quarter. So lastly is the revenue from all other segments, which is 7.2 billion. This is basically all these companies. You can take a look here, and then we'll go to the key takeaways, right? So AI, right? That's what investors are excited about in this earnings call, right? So when it comes to capex, Alibaba's management expects that in the next 3 years, they'll spend as much capex as they did in the next 10 years, right? So to me, I expect the free cash flow to go to zero, but that's not the actual economical earnings of the company, right? They are investing in growth, right? That's what I believe, right? An amount where free cash flow valuation doesn't really make sense, right? Because if you take a look at the earnings for some of the big tech companies, you're like, who is paying like 100 times earnings for Amazon a few quarters ago? But actually, this is not reflective of the free cash flow that the company can produce, right? So for me, I'm going to maintain that they have the ability to generate 20 billion of free cash flow a year, right? And I think this is very conservative because I'm not factoring in any growth or anything like that, right? So should be more if these AI initiatives pan out, right? But we have yet to see this, right? We need maybe about 6 to 12 months or 1 to 2 years. So long-term view is that this AI is industry-changing transformation that only comes once in a few decades, right? So you can see that even in China now, there's an AI fever, right? So they expect cloud to be the future. So, and then they'll say that AI use a lot of cloud, right? So the next thing that they believe is that we're in the initial stage of AI, and they believe that the large language models will be commoditized. The current AI usage is increasing engagement on platforms and also help consumers find what they want faster, as well as the cloud segment where they are basically renting out their cloud segment for other people to use. So explosion in demand and more than they can keep up with was the actually comments about AI products, right? So why AliCloud has such a big margin versus global players? So when asked this question, actually they gave a question mark answer, right? So just address that the cloud is very competitive and their build up will help them improve margins, right? And we really do have to see this in the next 2 years, right? If they haven't do this in the next 2 years, then I think maybe Alibaba's cloud is just not as competitive as AWS or Google or Microsoft's, right? So the next page of key takeaways. So you can see that I'm focusing a lot of effort on the Q&A, right? Because the earnings presentation is from the management and their prepared numbers, but this is how you know what they're actually thinking, right? Because they actually have to answer on the spot, right? So in the future, they see significant profitability improvement coming in the international commerce segment, and this is a comment that they made, right? It's hard to say that if international commerce will be more profitable than China commerce, right? So my personal opinion is that no, not really. I don't think international e-commerce will be more profitable than the China segment, right? I think it will be about equal, because you can see that international commerce is actually very fragmented and more variations, right? Because every region has a certain liking that they like or they don't like, right? And I feel that international is more competitive than analysts think, right? A lot of analysts in the earnings call seem to think that you can come to Southeast Asia, it's easy pickings, you know, there's no competition here. But as you can see with Lazada, they are getting their ass whooped by Shopee, right? So I think there is very fierce competition here, right? And I think Grab will also be entering the e-commerce space, right? In fact, some people can say that they're already like partially encroaching on the e-commerce space, right? So next, we'll consider share buybacks based on the share price, right? And I really love to hear this, right? Because they are not buying shares at any price, right? In fact, today I would find that they are buying a lot less shares than they did in the past. And I think that's a good thing, right? Because when the prices are low, they are buying back a lot of shares. So the EPS improvement will be very big, right? So next is a very vague answer of the chip sanction question, right? Basically, they said that they are not relying on one chip provider. No matter what happens, they'll be able to continue capex spend, right, as planned, right? So they are definitely using Singapore to evade sanctions, because you can see that ever since China got sanctioned, actually Nvidia's exports to Singapore has actually just blew through the roof, right? And divestment question, basically they are being asked that whether they are going to divest more companies, right? Because I think in the past they have been divesting, in the past I think 1 year, they've been divesting a lot of companies, right? And just now they were just saying that they already sold Sun Art and another company, right? So they said that they passed a monopoly test, and divestment for the companies that are not key to their core business will be divested, right? So they are not divesting the core assets like they announced back in 2022 or 2023. They said that they are going to split Alibaba into like 7 different companies, right? So they walk back those plans, and will look for more ways for the market to better reflect value, right? So this is just another management speak again, right? So my thoughts is that conglomerates will always trade at a slight discount, right? Because each part is not focused on maximizing profits, right? Some parts of the conglomerate are used to support some other parts of the conglomerate. So an example would be the international commerce section, which is being actually subsidized by the China commerce and the other profitable segments right now, right? So another last thing is Quinn is not driving that much revenue growth. They have said this openly in the earnings call, but it's key to getting people to stick with AliCloud and other business, right, due to the efficiency. So basically what they're saying is QN, this is Alibaba's AI model, helps the people with whatever issues they have, right? But the ease of interoperability helps basically Alibaba get them to stick with AliCloud, right? Maybe this QN actually works very well with AliCloud. That's why they are saying this, right? So the last segment, which is risk, actually I've added my face back, so hi, you can see me again. So the risks are that they are betting very big on AI, right? So this can backfire heavily, right? It looks really good at this point, but again, everything looks really good until it doesn't, right? And the next is trouble getting chips from Nvidia and also AMD, right? So they're using Singapore as a sanction evading tactic, and might be a huge risk if US officials decide to crack down on it, right? So I would say that this actually that's why I said, right, I'm focusing on how much free cash flow the company can actually generate, right? But if they do lose the AI race, I think this company might be in a bit of trouble, right? Because they are one of the big tech companies in China, right? So if Tencent or whatever, their AI is better, and this can really influence the cloud usage, right? So this is more focused on the cloud business, right? Because if your AI is not good, nobody wants to use your cloud business, right? So the last part that we want to get to is the valuation, right? So I'm still going to use 20 billion free cash flow for my valuation, and we can see that today is trading at 351 billion minus the 52 billion they have in cash, and then we divide it by 20 billion. So we can see that Alibaba is still trading below a 15 times earnings, right? So for a big tech company, I think this is still considered either cheap or fair value, right? So 15 times free cash flow for a big tech company like Alibaba, I think it's still considered quite cheap, but definitely not a no-brainer buy anymore, right? So in order for you to justify this buy and get maybe a 20% return, maybe you have to continue to bet on multiple expansion, as well as maybe my free cash flow number is wrong, right? Maybe the free cash flow is not 20 billion but 25 billion. Then in that case, let's see, 351 minus 52 divide by 25. So in that case, you can see that it would be much cheaper, right? But I'm going to be conservative and use 20 billion in free cash flow, right? Because I don't want to adjust my assumptions just to fit the narrative or fit the picture. So what am I doing with my shares personally? I'm up about 100% on my Alibaba shares, and I'm definitely not selling here, right? 15 times free cash flow, still too cheap for me to sell, right? If it's about 30 times free cash flow and the growth is about 10%, then I might be looking to trim off a bit of my position, right? But for now, I still see that there's a pathway for Alibaba to double from here. So at this current point in time, I'm not buying any Alibaba stock, nor am I selling any Alibaba stock, right? So I do still believe that at 15 times free cash flow, it's either fair value or slightly undervalued, right? But if you're interested in a stock that I see has a similar setup to Alibaba stock back in 2023, I'll leave a video at the end of the video. With that being said, that's about all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, and also hit the bell button. With that being said, have a fantastic day ahead and peace out.